Rajasthan Refinery has got a capex of 43,129 crore, and it will be funded in the ratio of 2:1. It's 2 debt and 1 equity. We have already issued an IM for that, and we are very close to completing that exercise. I think in the next month or so we should be able to close.
So Brent is above 77 once again, and our indications with the International Energy Agency seem to be suggesting that because of Venezuelan issues, the prices may not come down in a hurry. How are you analyzing the situation? Because the last 24 months have been difficult for OMCs as such, and also is it leading to any kind of demand destruction? How are the volumes been on both SKO and MS?
Last question first, that there is no demand destruction per se because of that as of now. In fact, MS and HSD growth had been good. SKO, there is a demand destruction, but that is because it is getting replaced by LPG. If you see last year, there was a demand destruction for SKO by 29%, but there was a growth of MS, HSD and LPG. LPG grew by 11%. Now, as far as the current pricing is concerned, Brent increased in last 2 days almost $3 to $4, 77 today. And it is on the back of a lot of information in the news which is coming up. All of a sudden there was a drawdown from the US inventory. It was a news that there is an increase in demand from China. There is a drop in the production in Venezuela. There was some disruptions in Libya. But there is also a parallel news that the non-OPEC countries may increase their production. There is specific news that Russia may increase the production in Q4. And the last piece is the Iranian barrels, to what extent the sanctions will affect whether the whole of Iranian crude goes out or it remains. That will decide the crude pricing. But we are expecting that it should be it should hover between up to 80, I think, not beyond that. That is what our anticipation is. At that time, the other things will kick in to bring it back. And 80 had shown a resistance level in the past also. If you remember a few weeks back also, it has gone to 80, and at that time also said that probably I still expect that it should come back.
Sure.
I still hold that view. And let's see how the non-OPEC countries operate. On the OPEC block, Saudi has got a capacity to increase the production.
Right.
Other countries will have lesser capacity.
So in this light that prices are continue to remain elevated, how are your marketing margins panning out? Because we have seen a difficult phase for you, where you were not entirely being able to price your, take the marketing margin with linked to the pricing, and there were some lags which actually impacted the overall valuation of the company. Do you think you're heading into that zone once again, where those lags will start coming back in your marketing margins and also your overall trend in marketing margins?
Yes, when the crude prices are higher and the exchange rate is also higher parallelly, both the things, we should not forget the exchange rate component now, because two together were not happening earlier. This time they are both are in tango. It does pose the challenges to us in terms of our capacity to pass on the full burden to the end consumers. And we cannot be oblivious of the consumers in any case. At the same time, we cannot forget the fact that the companies have to remain in the healthy economic condition. Financial strength should remain, because these are the high capex, high turnover, lesser percentage of margin businesses. We have to balance these two, and in that case, the taxation also plays its important role, because there is substantial taxes on the total thing. So taxation part, government deals with it, and if it comes in GST, there may be some sort of rationalization possibilities there. As far as we are concerned, it is one thing should be clear, that our marketing companies do not make the hefty margin if the prices are low or the thing. We got certain formulas on which we work it out, and we need those margins to ensure that we are able to implement all our projects which we take it up for the country itself, to ensure that we are able to cater to the energy needs of the country.
So my last question is on gross refining margins. The first quarter saw gross refining margins for the sector overall remain soft. Do you see same trends continue, or you see some improvement coming in?
If the crude prices remains where they are and the cracks remains what they are, then we should be able to see a GRM of around $7. But if the cracks softens and the crude prices goes up, then it has got a negative impact, in the sense because the fuel which we burn in the refinery will be at higher cost. But we think that diesel cracks should continue to be healthy. MS cracks are slightly MS cracks are slightly softer of $9 to $10, but diesel should be good.